What's up, traders, and welcome to my stream. In this video, we're going to discuss the master key, what I use every single day in the stock market, what kind of criteria do I have for the flow, for the news, for the chart, for the liquidity, what kind of strategies I have. I pretty much wrote a very short 30-minute video of my ultimate day trading guide. This is great for beginners and also for advanced to understand what I'm doing every single day. Every single day I wake up around 7 o'clock in the morning. Sometimes 6:45, and I look at the stock market. My criteria, first off, we're going to talk about the criteria, and then we're going to talk about the strategies for buying it. This video is going to be around 30 minutes, maybe 45, maybe an hour. I'll try to talk as much as I can, but here we go. So when I open up my screen, I look at my pre-market gap scanner. And this pre-market gap scanner, I'm pretty much looking for stocks that are gapping up more than, 3 to 4 or 5%. And they're pretty much moving. The first thing I look at is the float. Right here, the way I set up my pre-market gap scanner is I have really light green for stocks underneath 1 million. So this will be a stock pretty much calling a micro float. A stock underneath 1 million is a micro float. Stock underneath 30 million is going to be a green, a darker green. I have it set up as darker green. I have it color coded. And I have other things color-coded, the volume, the insiders, institutions, the short availability and so forth. So the first thing I look at is the float and the gap percentage. I usually look at stocks that are gapping up more than 30%. So that's going to be right here. So we're going to write probably over here, stocks gapping up more than 30%. So greater than 30%. So I look at my gap scanner, I look at stocks that are gapping up more than 30%. And right now, I'm going to probably looking, there's many criteria which I find stocks. One of them is from the pre-market gapper, and another one is the pre-market scanner. And I have two pre-market scanners. One pre-market scanner is low volume, and the one pre-market scanner is high volume, and then I have a midday scanner. So I have 4 different ways of finding stocks every single day using trade ideas. So the first thing, once I find a ticker that I'm interested in that's gapping up more than 30%, I look at the float. So if it's under 1 million shares, it's going to be a micro float. If it's under 10 million, it's going to be probably a lower float. And I also trade stocks between. I've spent 18 years trading and build a system that takes you from zero experience to real life trading profits. Get 6.5 hours of fast track training plus access to my daily live streams each and every day. I've recorded every single trade for the past 4 years and turned it into a 13-hour course with 500 plus real life examples that can get you from zero to profitable trading. I show you how to spot small cap runners like SMX, which ripped from $5 to $500 in just 3 trading days. That helped me generate over $100,000 on just one ticker. I also nailed one of the top shorts of 2025, shorting Beyond Meat at $6.80 and covering it at $4 a share, banking over $4 million just on one ticker, and recognized at SMB Capital as one of the top shorts of 2025. Click the link below and learn how real traders really profit from small cap stocks. 30 million and about 10 million, and these stocks are going to be like darker green, but you don't need to worry about that because only about 30% of my trades are stocks between 10 million and 30 million. So just understand that. So we got the float underneath 10 million, and then the float between 10 million and 30 million. Next thing I look at is pretty much the news. The news is the most important thing. About 80% of my stocks have news. Not all of them. Actually, 75% of the stocks that I've been trading for the last 4 or 5 years do have news. But that's not necessarily. It doesn't need to have news. Sometimes a low float moves based on the stock market momentum, and it doesn't need to have news. But I prefer it to have news. If it doesn't have news and it's like the only one on the over 30% and it's a micro float, it doesn't need to have news. It will run just because the momentum and everybody's buying it. So first thing, what kind of news do I look at, and what I'm interested in, and what kind of news I'm interested for that stock to have when I go read it? So number 1 news are probably your cancer and your biotech are probably the number 5 star. Going to put a lot of stars here. Probably cancers and biotechs are pretty much the one that make the most amount of money. Agreements are probably going to put it like, 2 stars. Phase two and phase two, like phase two or three are probably, 5-star news. I'm going to put like 5 stars here. So 5 stars for phase two and phase three. You got FDA approval merger. That's like three stars or maybe 4 stars. And then you have a stock that has money. They have a contract, they have a deal, they have a pretty much, I don't know, $20 million for, as higher the number is, the better it is. If it has like a $5 million deal, it's not really a lot of money. You're looking for something that has, I don't know, 500 million or $1 billion in contract and in money, something significant that will move the stock. So it has a contract, it has a deal, it has an agreement, it has a merger. That means, 2 companies combined as one, and they pretty much merge to form one company. So from 2 companies, 1 and 2, they form one company, and this one company, the fundamentals change. You're not only, when you're buying a ticker under the merger, if you're buying, if you're buying this stock, you're buying 2 companies. So therefore, the volatility on it is going to be, you're going to have a much more, a bullish opportunity here. Now, so the third thing I look at is at the chart. A lot of people don't understand charting, and they're pretty much new, and they're like, how do I trade this ticker? I broke it down between clean chart and dirty chart. What does a clean chart mean? That means I look at right here. I look, say this stock goes from $1 to $10 in the past, I don't know, in the past 6 months. And the only time we had, you look at the biggest volume candle, you look at the big volume candle right here is the volume candle, and you try to pretty much look at the resistance. In this situation, it went to $3. So in the past year, if I had one volume bar of, let's call it, I don't know, 10 million shares or 50 million shares, and this stock went over to $3. That's pretty, it only spiked once every blue moon. What you're looking for is a stock that has very low volume, and it hasn't been active. Nothing has happened for the past year, maybe 2 years. And it's just been, selling off, kind of bouncing, selling off, kind of bouncing. That's really what you're looking for. You're looking for an inactive stock that people, you're looking for a fresh stock. So when you think clean chart, think of a fresh chart. So, it's no wonder that these stocks, they don't have that much volume, In the stock market, when you buy a stock, especially a low float, you're looking at, where is the resistance? Where are the back holders? So if there are no back holders, there's no resistance. So it has a high probability of, say, as this stock, it was between $1 and $3 for like 2 years or 1 year, has a high probability of spiking from $1 to over $3 and then spiking to $15, $20. I've seen them go as high as $500. And this aligns with me as a 52-week breakout. This would be a 52-week breakout because it has never passed the $3 round, $3 for the past year. So this would be a clean chart. It's also a past runner. That means, what does past runner means? That means it has ran in the past. So if a ticker ran in the past, say over here, it ran from, I don't know, $1 to $3, it went, 2.5 times your money. So 2 times and a half, that's a past runner. It doubled. So it went up more than 100%. That's really good. But so that's a past runner. So that's something I'm interested in trading. I'm interested in trading in a clean chart, and I'm interested in trading a past runner. Those are really important. And I'm looking at the volume on the daily to see if there was any big spikes and whether that spike had range and whatever, not have a lot of resistance. And the third thing, I'm looking for a stock that has range. I'm looking for a stock that's been trading between, $1 to $10 or $1 to like $50. That thing, a stock that has range, that moves, that is active. This is an example of what I like to trade. Clean chart, past runner, range, and very low liquidity on the daily chart. Number 2, what I'm not interested in trading is a dirty chart. This is a dirty chart, means a stock that's been trading between $2 and $5, and it has pretty heavy volume, say, pretty heavy volume over here between $3 and $5. and it's basically doing nothing. It's just going up and down 10%, 15%. It's not like a big deal. That's something I'm not interested in trading, and it has no range. You see $2 to $5 for the past, I don't know, year or two, and it pretty much had high volume on the daily. It has no range. Like when stocks are between, say, maybe 30 cents and like 60 cents for like years at end, and they have heavy volume, that means, you know, the floats are probably astronomical. They're diluting shares, and you don't want anything to do with that chart. This is an example of a dirty chart. It has, you know, it has no range, has a lot of volume, has, you know, very low range candles. That's what I'm trying to say. These candles have high range. You know, when I see these big candles on the daily, this is the daily, by the way. If I see a stock going from 3 to like 3 to 30, that's a stock that has range. When I see a stock going from 2 to 5, that's the most it could do, you know, throughout a 2-year period. That does not excite me at all. So I'm looking for a stock to have range, and I'm not looking for a stock to be dirty. Then we're going to look at the liquidity requirements. A lot of traders just, you know, there's, you know, since I have different scanners on the gap scanner, I have the pre-market gap scanner, I have the low float scanner, and have, you know, the liquid low float scanner, and I have the midday scanner. So I have 4 scanners that I'm looking at. A lot of these stocks you're going to see, especially on the low float pre-market scanner, low volume pre-market scanner, you're going to see stocks that don't have volume. You know, on the 1-minute candles, you're going to see stocks that pretty much have a 1-minute candle that is under 200,000. So you're going to see them, you know, just pop up on 20,000 shares. You know, maybe it's going to go from, I don't know, $1 to like, you know, 150 really quick. I don't want to trade that. That's called an algo spike. I'm not interested in trading an algo spike. I'm interested in trading a stock that has news, is fresh, it's clean, and, you know, it has money. Some of these news here. So the liquidity requirement for me is 200,000. You know, you put the intraday 1-minute chart on it, and then you look at 200,000 at least. I prefer stocks to have at least 500,000 on the 1-minute. That means every single candle on the 1-minute needs to be above 200,000. That's the minimum I like to trade. You're going to see a lot of tickers that are just pop up on 10,000 shares, 15,000 shares, and they go pretty much nowhere. They just spike up in 2-3 candles, they're sold off. I'm trying to avoid them at all costs, because sometimes they do release news and they call pop and drops, and they go up for 3 to 7 minutes and then they sell off. So it's important to avoid those. Those are to avoid. Do not trade them, and do not, I mean, if most of you are not fast enough on your keys, and I do not recommend you guys trading them at all. Moving on a bit, moving on to the daily volume. As you can see, so here we have 3.7 relative volume. So that means in the past, I don't know, however months we're going to be looking at, in the past, I don't know, 6 months, it's been trading 100,000 or 200,000 on average on a daily basis. I'm looking for at least 7 times the average volume. That's the ADR. I don't know, average volume. So the relative volume, that's what it means. So in the past year, it never went above, you know, 200,000 on a daily basis. I'm looking for this number to be 7 times at least for me to be interested. And what I'm looking for is a stock that has really high relative volume. That means it's trading way, you know, 7 times the average that's been trading daily for the past year. And I'm also looking for today's volume. You know, I always look on my pre-market gap scanner and I look at the volume. The volume should be at least 2 times, maybe at least 1 to 2 times the float. That is the minimum. I prefer stock that have, you know, at least 3 to 5 times, maybe 10 times the float, because that's when you get into the float rotation, when stocks rotate the float, and pretty much once you get a stock rotated, it's very easy for a stock to go from, you know, $2 to like $100. It's very, very easy. Or I've seen like a stock go from 15 cents to about, you know, $12 in one day, just rotating and rotating and rotating and rotating. So this is my criteria, my float, my news, my charts, my liquidity requirement. Obviously, I have 4 different scanners that I use: the pre-market gap scanner, the pre-market low float, pre-market low float, pre-market low float, low volume scanner, pre-market low float, high volume scanner, and then I have the midday scanner. So I have 4 different types of pretty much scanners. So now we're gonna go into some strategies. Of course, we're gonna have a lot of strategies to talk about. I'm gonna try to move a little bit to the right over here. So we're gonna discuss the strategies so you guys can see it. Obviously, this is all part of my course. I go into detail around 15 hours. My course is 15 hours long. And I go into detail about all these strategies here, up in detail to the very last little detail that you might not want to catch in a 45-minute video, which is here. So we're just going to faster and more of a general outline of what I'm looking for, and get you started in trading, just doing the basics. As you progress, you want something more advanced. You want those 15 hours because you might be missing that little piece that I'm not saying it in a 30-minute video. And that little piece of information can make the difference between you being green on the day and you being red on the day. That little difference of me talking for 15 hours will make a difference in your bottom line. That's why everybody watches my courses multiple times as I go through all these strategies. So my strategies here are pretty much simple. We're going to go a little bit to the right. My strategies are pretty much simple. I have 52-week breakout, daily breakout, day 2 continuation, first green day bounce, and the 7 a.m. push. These are buy strategies. These are buy strategies that I use, using the daily. And these are buy strategies that I use using the intraday. So the daily means I'm using a daily resistance point. These are the daily right here. And these are intraday. So I have pretty much 10 strategies, and I also have about 4 strategy when it comes to shorting. So I have, there's a lot more to this. And I also have AI, pretty much documenting, every single strategy and what is the percentage you're looking at, and what is the percentage that they gapped. This is very important. Every little detail, if they have news or not, this is really key information that will get you started into trading. So the first strategy is the 52-week breakout. This is the daily right here. So say from the January 2025 till January 2026. So you're using a time span of 1 year. So in this situation, you can see that the stock went from, $2 to up to $5, and we just consolidated right there. You can see here that a 52-week breakout means it breaks the high for the past year. So say right here, we had trouble breaking $5. We break $5 and we go to 13. That's a great setup. Those are my favorite setups, especially in big caps. Right now we have some ScanDisk, which is some data center, hard drives. Pretty much a stock is going up vertically and it's just doing continuous 52-week breakout. Those are 52-week breakout. That means the past year just going higher and higher and higher and higher in each day. That's how Tesla went up. That's how Nvidia went up. And this also applies to small cap stocks. Next thing you know, you have a daily breakout. That means right here, say a stock went from 1 to 5. And right here, you have a daily resistance of $3. So, as I wake up in the morning, I pretty much like to draw lines of where's the resistance point. So I marked the line of where each of the resistance point, maybe it had some resistance at 3, maybe at 4, and maybe at 5. So I draw that on the daily and I align that with an intraday. And as soon as this, intraday breakout spot of $3, let's say, breaks, I try to buy perfectly at $3 and sell it into the next resistance where I drew, also depicted by my yellow line, as you see in all my charts. And I take profits of around 20 to 35%. Those are awesome, but make sure you hit the liquidity requirement and all these criteria here, the news, the float, and all that. So this is a daily breakout. That means it breaks a daily level that's been, established on the daily chart. It can be in the past 6 months, can be, I prefer in the last, 9 months. It's not a 52-week breakout, it's just a daily breakout that's been struggling. Say the stock has been struggling to break $5 in the past 6 months. So let's call it 6 months. It's been struggling to break $5, and it's been struggling to break $3, $4, $5. So $5 is a 52-week breakout. This is a very example of a daily breakout. The next thing we have here is a day two continuation. So as you get into the stock market, you're going to see a lot of 100% movers, 1000% movers, 500% movers. But when you see these setups, everybody's going to see, like, every single day, traders are going on the top gainers, and they're pretty much taking, the top three, and they're putting on the watch list. So say you had a stock going up 300% in one day, or 150%, people take that stock, the top percentage gainer, then they put it on their watch list. And what these traders are doing, they're looking for the stock to break the day's high and for the continuation to continue. So say you had a stock going from 1 to 5 on day one. This is a day one mover. That means on this day, we had the news, we had the volume, we had the float rotation, and the stock pretty much held half its candle. You can see that, half its candle held. So it held overweight 450, held half its candle. So that's important. I like them when they have at least half their candle on the daily. And say right here, the high that it did this day was $5. Right here, you see the intraday price action that we were going around 450. We're kind of just consolidating, and suddenly, before 10 o'clock, we break $5 and we go to $8. This is a very solid pattern everybody should use. What you're looking for is to buy it as it breaks yesterday's high of $5 and to sell it for more than 20 to 35% profit. You can see exactly. I know I have so many examples that I can tell you by the decimal point, whether it's 22.5%, 22.3%, 24.6%, or whether I have them all put in a spreadsheet for all those people interested in purchasing my course. This is the day two continuation. This happens a lot. Also, it happens in big caps, and also it happens about majority of them. You want to use it in small caps. The next setup, let's see if I can move this a little bit to the right. Right here, the next step is first green day bounce. This is first green day bounce. You've seen that I made a huge gain on a first green day bounce. Just a stock that's been selling off from $20. You have red candle, red candle, red candle, red candle, red candle. 1, 2, 3, 4, 5, 6, 7. I prefer them to have at least 8 red candles. The more red candles, the better. And what happens is I prefer them to dilute from the high here of $20 to dilute at least 80% of the price. So when the stock sells every single day and goes down to $3, $3 is diluted at 85% of its value, I like to buy the stock as it breaks yesterday's high. So in this situation, after 9 red candles in a row of selling, the stock pretty much broke. I pretty much like to label yesterday's high on the daily, and I pretty much draw that out at 4. And then right here, I look at the intraday. So say at 7 a.m., the stock pretty much flirts around with 4. And when it breaks 4, it spikes up and it goes to 10. That means from 4 to like 10 or something like that. Or maybe it's 3, maybe it's 4. I don't know, whatever it is. But from 4 to like 10, I don't think it goes to 10, but it goes, if I tell you the exact how much it goes on the first green day bounce, we just had an example with SMX. SMX, we bounced from, $20, $23 to about $40. So it bounced around, about 100%. But the average of what I've experienced on the first green day bounce pattern, the average that I was able to make was around 33 to 34%. So I made 50K on SMX just the other day using the first green day bounce strategy. And, I could have made a lot more because I bought it at 23 and sold at 30 and went to 40. So I could have made way more than 22%. I could have made 30 or more, but my average from my data is around 34%. The next strategy I have is the 7 a.m. push. This strategy shows up primarily in the morning. It only shows up in micro floats. And it shows up, when micro floats are hot, floats underneath 1 million, I pretty much look at 7 o'clock a.m. and I look at stocks to, all of them have range. They don't really have to have news, but they need to have a clean chart, have range. a past runner and have a clear resistance point. So when I see a stock at 7 a.m., I see a stock just hovering around, I don't know, between 3 to 6, I don't know, between 4 to like 7 or whatever right here. So you have a less than 1 milli flow. Keep that in mind. So it's a micro float, less than 1 million in float. It has a clean chart over here. And then you have, a stock that you buy it, right before the 7 a.m. push. Sometimes it doesn't happen at 7 a.m. Sometimes it happens at 6:45. Sometimes it happens at 6:30, but I've seen it happen more often than not. The idea behind it is, this strategy works only on floats underneath 1 million. It's a pre-market push of micro floats. Keep that in mind. It does not work as well between 1 million and 10 million. It doesn't work that well, but it primarily works under 1 million. And so after we pretty much discussed here all these strategies that I have, I also have 3 or 4 different strategies for shorting. Make sure you buy my course and get into the live trading room in the Discord room. But these are pretty much intraday patterns. That means I pretty much figure out whether it has my criteria here, the float, the news, the daily chart. So these are like, the volume. These are just how I pick stocks based on, liquidity, based on the chart, based on the news, based on the float, and then based on, what is the percentage of the gap. I need a stock that was gapping up at least 30, 25%. So now I pretty much look at different types of setups. In this situation, I have 3 different setups using VWAP. VWAP is very important. That's where big money is. So think about it as a brick wall. Always think about it as a brick wall. If the VWAP breaks on the front side, it needs to come test VWAP on the downside and then bounce right off. If VWAP, goes underneath VWAP, if it goes underneath VWAP and hits VWAP, that's like a brick wall. Think of it like a red brick wall. That's a great area of support and great area of resistance. So in this situation, I look at VWAP reclaim before 9:30. So this is a 7 a.m. to 8 a.m. You have a stock just going up right about here. And then right here, it forms a lower low, and then it pretty much a lower low, and then a high, and then right here, a higher high combined with a VWAP reclaim. You can see so here that sometimes it just breaks through VWAP and shoots straight up. You have to be mindful of that. But most of the time, it breaks VWAP and comes back down and tests it. So it goes above VWAP, comes back, test it. You load some shares with under the VWAP stop loss. So here would be your stop loss, and then it goes straight up. I've been discovering this strategy. This is a great strategy to use. I call it VWAP reclaim before 9:30. The next strategy I have is VWAP reclaim after 9:30. VWAP reclaim after 9:30 works on floats underneath 10 million and stocks that have news. 85% of VWAP reclaim after 9:30 happened on stocks that have news. So I will never buy a VWAP reclaim after 9:30 if the stock does not have news. And ideally, I've seen these tickers, say you have a stock after 9:30, we spike up, say, I don't know, $1 to like $5, and then it pretty much opens up at $2. And then right here, you have a VWAP reclaim, and then you have a VWAP reclaim test, and then go straight up, I don't know, to 7. I've seen them go something like this. It's not often, but I've seen them. Ideally, this is what you want to do. So, just because, 90% of traders, when they see a gapper, that's over 30% that is opening up under VWAP, usually it sells off. 90% of them do sell off, but sometimes they do VWAP reclaim, especially if they have news, and they squeeze all these shorts. The reason why this strategy works so well is because all these shorts are in it. So in order for a stock to go higher, you need to have, short sellers covering their stock. So this is why I have this VWAP reclaim strategy. It works on tickers that have pretty much news. They're under 20 milli flow. They're opening up after 9:30 under VWAP, and they just pretty much have this crazy range because the stocks will go literally like a vertical candle straight up. The next strategy we're gonna have is a VWAP bounce after 9:30. So this strategy works like, say we had a stock going from $1 through like $3, right? So you had a stock going from $1 to $3, and then pretty much at 9:30 starts selling off. And you can see that most of the time the stock, when it moved from 7 o'clock in the morning till about 9:30, it was above VWAP. What we're looking for, the VWAP bounce strategy, is to pretty much come back down to VWAP and then continue on back up. That is a very simple pattern. I call it a VWAP bounce after 9:30. So this is how I use VWAP. VWAP reclaim. Moving on to the last part of the section, we have here wedges. I use wedges a lot. This is part of my intraday price action, the intraday prices. Wedges they're pretty much three types of wedges. You have the uptrend wedge, you have the sideways wedge, and you have the downtrend wedge. What we're looking for is a 3 times the charm breakout. In this situation, you had a stock pretty much going straight up to a resistance point, let's call it $5, and pretty much came back down, made a low, and then it came back down to 5, and then it came back down, made a higher low right here, and then you connect these lines as an uptrend. And then the moment that we break the $5 mark, I don't know, it's going to probably spike up to 7. This is an intraday pattern using the wedge pattern. We also have the sideways wedge. This is pretty much the majority of them are probably going to be the uptrend wedges, the intraday price, the intraday patterns are going to pretty much be the uptrend wedge. There's a little bit, some of them are sideways wedge, not too many, but some. And then the downtrend wedge, I do use it, but not a lot. Sometimes I use it, sometimes I don't. Sideways wedge, like this, you have a stock pretty much coming back here, coming a low, a high, a low, and then pretty much a lower low and a lower high, and then it pretty much gets condensed into this wedge pattern formation, and then it breaks out. Then you have the downtrend wedge, pretty much goes, you have pretty much a stock going up, and then a low, and then a higher low, and then a higher high, higher low, and then finally it breaks the downtrend. These are intraday price action. VWAP, VWAP reclaim before 9:30, after 9:30, pretty much VWAP bounce after 9:30, and then I use a lot of wedges. So this is pretty much it. I also have a book in which I write every single day. This is very useful for you guys, for those people that are just starting out. In this situation, I pretty much write my losing trade. What can I learn from this losing trade, and how can I improve the next day? Those are pretty much very important as a starting trader. I also have different sizing that I pretty much use. I pretty much use a size on all these setups. Actually, right here, the 52-week breakout, the daily breakout, the day 2 first green day bound, I use full A size. Right here, the 7 a.m. push, I use B size, and the wedges I use between maybe B and an A size, depending on how I'm feeling. And they all have to fit my criteria. They have to fit my float, my news, my clean chart, and my volume liquidity that I have over here. All of them needs to be gapping at least 30%. I like them to be gapping at least 25%, so everybody sees them. And the profit that I'm looking for is 20 to 35% on each profit. This is pretty much, I go into detail of 15 hours of in detail, pretty much giving you my scanners that I have to find these tickers on the pre-market gap scanner, on the low volume pre-market scanner, and the high volume pre-market scanner, and the midday scanner. I have all these scanners and the midday gap scanner. Those are 5 different scanners that I scan on a continuous basis. As soon as these companies release news, I'll be quick on the keys to buy them and pretty much A size on them and make a huge, amazing profit out of them. Those are pretty much what I have for you guys. When the market is hot, you're gonna have so many plays. I also have 3 different strategies for shorting: the gap up short, the day 2 short, and the day 3 shorts. Those are really solid setups. And make sure you click the link below and join me each and every day while I'm live streaming and trading from 7 o'clock in the morning till probably 10:30 every single day. And I'm usually busy during the weekday. So right now, take advantage of this video and study up. I also recommend traders to watch multiple times my courses and and pretty much remember what I'm saying, because right now this intro is only half an hour, but there's little detail that you're not understanding. And as soon as you pretty much start studying and start practicing, you'll be able to react that much faster to the news, to the setup, to the size, and you'll be more comfortable doing it, and you'll be making more and more money and respecting rules. My A size is probably 30K. My B size is 10K. My C size is CK. Having rules to not overtrade and not over, see all these setups. These setups are, your bread and butter, how I make money every single day from the market. And I'll be able to, that's your key to success. These stocks, when they move, they can make poor people very, very, very rich. If you were able to study and you're patient, you have the scanners, and you have the motivation, discipline, and drive, you will be able to achieve what 99% of traders will not. With these tools and with these setups, this is your bread and butter here. I don't know if you're trading anything that cannot be measured, you're pretty much gambling. That's pretty much. And there's another couple of things. You need to set up your account in which, if you lose 9 times in a row, you need to still have an account. Those are very simple rules that that will get you started. You can't just have 2K in your account and put it in one stock and then lose it all. You need to have those pretty much those basics set up. And then one of my other important rules is like, take your average 10-15 days of profit, and that is how much you should be giving your daily goal or daily risk. Say I make 300, 500, 300, 200. Say in the past 15 days, I made an average of $250. That is my risk per day, and that is my target per day. If you do this consistently, you will be profitable, and you will survive hot and cold period, and you will prosper during hot market cycles. So remember, take your average for the past 15 days of profit, and that's your daily goal. That's your daily loss. And if you lose 9 times, you need to still be in the game. Those are just, basic information. And you need to have scanners. You need to be quick on the keys. You need to have all these 5 scanners. You need to be very reactive, because, these things move really quickly. And if you're not ready for them, you will just miss them like that. But, 1 minute, 30 seconds, 20 seconds makes the difference between $1,000 profit or a $200 profit. That little tiny second, whether it's in your settings of the scanner, which I have a low volume pre-market scanner, which I share with my members and those that pretty much bought my course, whether you have that sensitive scanner that sees it as soon as possible, that makes the difference between 10K day and a 2K day. That's you need to have that edge. That edge is, you're studying, and you possibly buy the course. This course is not for me. The course is for you to pretty much become rich. Those are your keys to success. I believe anybody with enough studying and enough repetition, you'll be able to make your small account grow to multiple 6 and 7 digits. If you have the drive, the motivation, the hunger for it, I will show you how to do it. But if you're just gonna, not put in the effort and wing it, it's just the reason why 99% of traders trade. Like, historically, the stats of trading and getting inside into this market or inside this field, about 90 from 1,000 people, about 900 from 100 people, 96 traders fail. 2 people break even. One of them makes 100,000, and one of them makes 3 million. So those are your odds. Your odds of success. These are just facts. If you're starting to trade without any strategy, you're going to be gambling. 96% out of 100 traders that start lose their account within 22 days. Don't lose your account. You need to have a solid strategy. I have a solid strategy explained in 15 hours worth of content. Don't lose your account. this video is for you because I'm already rich. I just ordered my first Rolex. I'm very excited to have it in the mail soon. So I don't need the actual money. This is for you guys. Other than that, I will see you all in my next video. Thank you for watching. Give this video a like and share it with your